The results we've just produced are fully in line with our expectations. They actually come off a record year last year, but they do reflect the consumer was there was some weak consumer demand really across Europe last year. But I think the interesting thing is that was really a first half issue. We start to see the consumer coming back in the second half across parts of Europe and in the US as well. So we actually ended the year with demand actually rising quite nicely. So we feel as if these results, as I said, strong set of results, really reflecting that weak consumer environment, but ending with the year coming out much stronger than we entered into the year.
So does that showcase then a consumer who is a little bit more resilient, you feel, who has been willing to spend perhaps a little bit more than you initially thought, particularly in the second half of the year?
Now we have seen a bit some more confidence returning in consumer expenditure. But when we look at our business, particularly in the fast-moving consumer goods, particularly in those everyday essentials, we've seen, really across Europe during the year, the consumer starting to feel a little bit more positive. It's not a complete rebound, but we've certainly seen an improvement there. We've seen a number of our big customers launch a lot of new products, new promotional activity as well. And I think this is all accompanied by a moderation in inflation, bit of a fall in interest rates, and it's just a slight improvement in consumer sentiment, and we're certainly feeling that in our business. As I said, the sales the volumes on an improving trend particularly in the second half of the year, and actually it's continued into the trading actually in our new financial year. So we're pleased with that.
Miles, lovely to see you again. Look, what is going on, though? I mean, I know you said improving trend, but we're negative across the board on revenue, profits, EPS, return on sales, ROACE as well. I thought this was a structural story, my friend.
Yeah, look, as I said, we came off a record result last year. We have seen that downturn in consumer, and this is 1 year's results. They're fully in line with what we expected, but we can really see the improvement coming out. We're seeing some pricing coming through as well, higher paper prices, really reflecting what is quite a different demand environment. There's no doubt about it. At the start of last year, I think we spoke about it at our half-year results. It was a more challenging time just for industry in general, following with a weak consumer. But I think the good news is we're really starting to see an improvement there, and I think that bodes well for our future years.